Good morning, everyone. It's Ankit. Welcome to a brand new video. Today, I want to talk about some dividend stocks you can invest in that can help you beat inflation at 7%. Investing in dividend stocks can be a great way to create a passive income streams to fund your financial freedom, but it is still feasible with recent inflation rates hitting 7% or even more. Yeah, it is still possible for you to beat inflation. One key metric in dividend investors use is the 3-year dividend growth rate, the CAGR, which is essentially the average dividend growth rate for the company over the past 3 years. Think of dividend growth increases like a salary increase or a salary raise at your current job or future jobs or any other job. Your dividend income will increase year after year just by being an investor in the company and holding shares within the company. Here are a couple of companies whose 3-year dividend growth rates have outpaced the recent 7% inflation. And maybe you might want to consider investing in these companies, but make sure to do your research before you take my word and go and invest in these companies. So if you're excited about today's video, then drop a like and subscribe. It really does help out and support everything I'm doing. Leave a comment with what your favorite dividend stock is, or a dividend stock that I didn't go over today that you might think I should include in this video, and why. Subscribe if you're new for weekly videos on investing and about health and life. I know I don't have any videos yet about health and life, but I want to release quality content, so I'm still working on those videos. But once I feel like they're, good, I'm going to release them. Let's try to hit 6,000 subscribers with all that out of the way. Let's get into today's video. The first stock we have on the list is Broadcom, which is trading under the ticker AVGO, which is a semiconductor company, and they have a partnership with a lot of different other companies. Let's see if we can find them. If you go to the investor tab, stock information, you can see the price of the stock, the change, the percent change. All the information you would need is going to be under the investor center. You can see the stock chart on their website if it loads, and here it is. Here's the investment calculator that they have on their site. And this is a really great, dividend stock that you might want to consider. And in a few minutes, we're going to go over their financials. Here's a couple of businesses and products that the company offers: wireless, wired storage, broadband, industrial. And under each section, you can see all the different things that it has to offer under those sections. Here's some of the key customers, leading position, different sections under which the customer would fall under, and how much TAM will be, if you add all those up, it's about 200 billion plus, featuring a highly diversified portfolio. The next stock on our list is SherwinWilliams Corporation or company, and it's trading under the ticker SHW. The stock price is at $251.53. It pays 90.95% dividends. PE ratio is kind of high, it's 3603. When you look at the year to date, it's up 4.77%. And let's look at the company finances. Their net change in cash is, up 62.47%. Cost of revenue is up 22%. Operating income is down. Net profit margin is down. They beat last earnings and the earnings before that. The next stock we're going to talk about is Home Depot. Home Depot is another great stock that can help you beat inflation in it with the growth and also with the dividends. And if you guys don't know what Home Depot is, it's just a company where you can buy different type of floors, plants, things related to the house that you might want to improve when you're making a house, or if you want to make your grass better for your house, they have that. So all these different things Home Depot offers. Home Depot currently is trading at $340.74. It pays 2.2% dividends. The PE ratio is really good. It's 21.94. And when you're looking at PE ratios, you want to make sure it's, above 22 or 21. Well, it's between there, but let's look at how it's doing over the year. You would also get the 17.93% if you would have invested a year ago. And the finances are all really, really amazing. So the company is in a solid place, and if you find a good entry point and if it drops enough percentages, maybe you might want to consider investing in this. Next stock we have is Texas Instruments Incorporated, TXN. Over the year, it is breaking even, believe it or not. Over the 5 years, it's up 123%. It is paying 2.55% in dividends. The PE ratio is 21.79. Let's look at the finance. The company's finances are looking good. It is a little bit alarming that their net change in cash is 462%, but they are beating earnings. They did miss one earnings in Q3 of 2021. And now we have Best Buy, BBY. It's currently at 101.84. Dividends is 3.46%. The PE ratio is 10.35. The CDP score is it's an A. And the CDP measures actions of a company takes to address climate change. Though, the financials are all down, and it did miss its last earnings, is because we have, more workers going back on site and working. But, during the whole situation, people are using this website to buy laptops and other equipment for their workers. But, after a while, that slowly died down. So this will be interesting, have in the back burner. Let's see how it did over the year. Over the year, it's down 15%. So this is a stock, I would not invest in, but it was just a stock that I would like to mention. It is, down. It has a low PE ratio and pays nice dividends. So something you might want to hold for long term. Next stock we have is ADP, Automatic Data Processing, trading at $214.69. Dividend yield is 1.94%. PE ratio of 33.24. Over the year, it is up 16.43%. The finances are not that bad. The net change in cash is a little alarming. And net profit margin is only 1.54% down, but that's not bad either. All the rest of the numbers look great. So this is another company that's a great growth company. So you would have made 1.94% dividends and a 16.43% return over the year. The next stock we have is Microsoft Corporation, which doesn't pay high dividends, 0.83%. The PE ratio is 31.96. The 1 year chart shows that if you would have held for over a year, you would have got 27.31% in returns. And as you know, Microsoft is used for almost, if not every company around the world. So all their revenue is going to look amazing. And they have so much cash on hands, which they're using to purchase gaming companies and all these other different types of other companies to expand and grow as a business. So I really like Microsoft, and if it falls to a good amount, maybe something like 243, I will buy some. But you should always do your research, like I said earlier in the video, before you go invest in Microsoft. And then we have AMGEN, which is a biopharmaceutical company, which PE's ratio is 22.97, dividends 3.28. Over the year, it's down negative 5.38%. Let's look at the financials. The net change in cash is down 3.98 billion, 41%, which is bad. All the rest look good. They are beating earnings barely. So this is a more riskier play. Then we have companies like Target, TGT, which is dividends 1.59%, PE ratio 16.03, market cap is 104 billion, and over the year it's up 20.21%. Over the 5 years it's up 325%. Let's look at the finances. They have a net change in cash 158 billion, down 93%. It did miss earnings last quarter, or last earnings Q4 2022, which is probably wrong mistake right here on Google, because we're in 2022 right now and quarter 4 has not passed, but maybe they meant 2021. But you've probably seen the commercial for Aflac insurance company. It's the largest provider of supplement insurance in the United States. Over the year, it's up 24.53%. Over the 5 years, it's up 74%. It pays a dividends of 2.54%. The PE ratio is 9.85, and the financials are probably going to be good. Most of the financials are good, other than net change cash. It's down $1.16 billion, 174% down. It did beat earnings in Q4 2021. Next stock we have is Caterpillar, one of my favorite stocks. And as you can see, their finances is very, very good. They beat earnings in Q4 of 2021. The current price of the stock is $220.91, and it's trading under the ticker CAT. Let's look at dividends is 2.01%. PE ratio is 18.78. Over the 1 year, it's down 2.26%. Over the 5 years, it's up 139.73%. So if you're driving around or you're traveling, you might see a whole bunch of construction equipment, and that's what Caterpillar is known for. It helps design, develops, engineers, manufactures, markets, and sells machinery, engines, and financial products and insurance to customers via a worldwide dealer network. And you could also see their equipment building roads or building houses, or anything else,